is that this is one of the problems where most of the traders, they find difficulty in understanding these kinds of winners and losers. So if you want to ameliorate your performance, I understand you need a strategy to buy, how to buy stocks on time and to follow them, to put stop loss, to follow them and to exit them. This is something which is the heart of trading, but there are other things that you should work on in order to control your money inside your account. And this is one of the biggest things that you should focus on in the future. Now, if you want to make money. But some people, what they do in general, what they do is that they continue to trade and they don't check their account. Okay? They don't check. They know that sometimes they know that they are losing money, but they can't figure out what is the problem. And they don't study, they don't take a training, they don't ask anyone, and they continue to trade. Now, in general, most of these people that we say 95% lose the money, it's these kind of people. So I will just go ahead again and explain to you this. At least you have an idea about this thing. Okay, so let's go to the explanation again, and hope it will help you understand something. Now, I have told you before that one of the guys, he sent me an email, and believe it or not, he has 45,000. Okay, he is doing penny stocks. Okay, mainly penny stocks, and after let's say 1 year, his account now is $5,000. Now you can see that he is a loser. He loses all his money trading, but the thing is, when he has 45,000 and it was going down to 5,000, okay, now when it is going down like 4,000, 3,000, 40,000, 30,000, okay, 20,000, 15,000, 10,000, he has never asked the question. Never asked a question. Why? Okay? He thinks, most of the people think that it is just because they don't know the magic formula, because they think that other people or other traders you see online, they have what we call a magic formula, and if you know this, you will be making money. Now, this is the big mistake. And you understand that this in general is something psychological. Psychological, what does it mean? It means that when you begin the trade and you lose money, you will be angry against the money, about the stock market. You will be mad. So what you should do, you begin to revenge. Now, how do traders revenge the market? They trade too much, and they try to find the ugliest chart, the most volatile chart, stocks that go 100% up, 100% down, and they go to this stock and they throw their money. Because they don't know what's going on. They don't know the scams. They don't know the manipulation in this kind of stocks. Okay? And they follow some people who ask them to buy or to sell or to do. And the thing is, they use them. And these people, since they don't know what's going on, they will be losing all their money trying. Now, if you don't understand how the stocks move or why these stocks move, okay, this is the one thing problem that most of the traders they face. You don't know. Okay? Now, for my story, for my history, when I begin to trade, now I begin to trade a little bit, to make some money here and to lose some here, and then I lost the biggest loss. It means I lost a lot, the same as everybody else. Now, the thing that you lose a lot is that you don't know what's going on. So always at that time, my question was just a simple question: why stocks move up and down? What pushes them to go up and down? Okay? So if you have clear idea why they are pushed up and down, and if there is a scam, or if there is manipulation of stocks, or if there is anything, so when you begin to understand the game, you become more careful to control your money. You don't throw your money in any stock like this without knowing how to trade this kind of stocks. Because understand, penny stocks or big stocks or medium stocks, every category of stocks has its own risks and its own benefits. So you should understand this kind of things. And the losers and the winners, most of the people who are doing penny stocks, for example, when we say penny stocks, it means the stocks that are small. It could be $5, $2, or $5. But even sometimes, if I tell you that the characteristics of penny stocks, it doesn't mean that it is a small stock. It can be $200, but it acts, it behaves like a penny stock. If a stock, for example, you see now in this year, after the reverse of the trend, when the stocks are moving up, okay? If I tell you, for example, Uber has doubled in a few weeks, you don't imagine that. You say, how can this stock, you double your money in a few weeks? Okay? You double your money. Although it's not a penny stock. So, Uber stock in this situation behaves like a penny stock. It behaves the same. And you find stocks that are, for example, big stocks, $100, but in a few days, few weeks, they go to $50, to $40. It's the same as penny stocks. Although they take maybe more time, but it's the same thing. It means you are in stocks that are dangerous. So, when you are in certain dangerous stocks, and they behave like penny stocks, you are to get big losers. And this is the heart of the problems. It is volatile stocks. If you go to them, you should understand how do they move and how much your account will be at risk. Okay? You will be at a big risk. So you should have some strategy to deal with that. No one will tell you what to do in your account, but if you don't understand what's going on, This is the heart, this is the biggest problems in your trading account. And most of the people, they do penny stocks. Sometimes, for example, us in our trading, we have a penny stock. Now, in this Friday, we are at 139% up. But the stocks that I am doing and I show to my students are stocks that have a trend. They move slowly until they reach that. So it doesn't. It's not like stocks that they move one day up 100%, the second day 100% down. These are having some kind of manipulation, some kind of news, some kind of scams, especially penny stocks. Okay, there is some kind of manipulation. So you should understand which stock to trade, which are not very risky. Okay, some stocks you can. Even I find someone who tells me, "Oh, these stocks are cheap. I don't lose that much." But the people, they don't understand when you say cheap. If you put $1,000 in this cheap stock, tomorrow or after a few days you lose 50%. You have lost 50% of your money. If it is big or small, it doesn't matter. So take care of advantage of this percentage. It means when you make money or you lose money with high percentage or a very low percentage, you should understand what does it mean to your money. Okay? It's not because they are small, because stocks are small, you put little money. You say, "Oh, it is just I just put $1,000. I lost 500. But it is just 500. It's not a big deal." Okay? But you don't understand that in terms of risk, you have lost 50% of your money. Who is a trader who wants to go into a trade and having the probability of losing 50% of his money? This is very bad for some people who don't understand risk. They don't understand percentage. As I told you just now, when I'm explaining the losers and winners, I'm telling you that some people, they lose only 2 or 3 trades, big losers, and their account is wiped out. Do you understand? All their account is wiped out. Wiped out. It is just because they don't realize that when they say 50% lost, they don't think that it is big money. But it is. Let's say if you have only $2,000, all your account is $2,000. You put it in one trade, you put $2,000 in a penny stock, 10 cents or 20 cents or $1, it doesn't matter. Penny stock. The next day you lose 50%. If you have 2,000, then you lose 1,000. You have lost all your money. Half of your money is lost. Okay? So understand the percentage. It doesn't matter how much you put in a trade. Try to see the percentage, how much you lost. You should concentrate on not to lose that much in each trade. That's why you should stay. Because if you make big losers, you cannot stay many years until you understand, because trading, you need years to understand it. It's not easy. You need to experience the stocks, to see the volatile ones, to see the lazy ones, to see when we have good years. You should see when we have bad years. You should experience all of that. Now, if you don't, you will have a problem, and you will not realize how dangerous you are, and your situation will be very dangerous. because you lose money and you don't know how you are losing money. That's why what I'm explaining here is just you should take care of your account. Try to see how many stocks you should have, or how many positions you should have. You should stick with these positions. Do not give too much money to one stock and then give another one little, except when it is penny stocks. You should give them little. As in our trading account, penny stocks, I give them always small positions. Why? Because they move fast, and they move fast up and down. So I want to make the risk for these stocks less. Okay? I don't want to put like in the trading account, I can put $30,000 as you have seen in my account. Those of you who have the golden subscription or trading or silver subscription, I put 25,000, 30,000 in a stock. But a penny stock, I put 3,000, I put 10,000, I put 8,000. I put less money. The reason for that is that penny stocks are very, very volatile, and whenever you trade them a lot and you don't see the percentage, you will be losing a lot of money. Okay, so I think I have told you, it's nearly 1 hour. I have told you everything. So we will begin to see our friends what they say. So Rahmatullah said, hello Karim, hello Rahmatullah. بكيتو صح عيدك البلاد وكل عام وانتم بخير. العيد مازال ما جاش، العيد غدوة بعد صلاة. Jocelyn, hi Karim, hi Jocelyn. Bakito, how are you? Fabian, hello Karim, hello Fabian. Jocelyn, you said red eyes, my friend. Do you work too much? No, I sleep too much. I have already told you. Top series, hi Karim. Is it good idea to pull out little bit of cash from your profits, or should you reinvest all of your profits in the next trade? So, you know, profits and not profits, it depends on you. What are you doing with this trading account? Are you just making this trading account bigger and bigger and bigger, or do you need this money in something else outside trading account? For example, you have a home that you are paying very fast, and you don't want to stay 30 years. For example, you have a 30-year fix home, and you just bought it with 10 years or 15 years, and you want to you don't want to pay a lot of interest, and you want to reduce the years. You can take some of your profits and throw it in your mortgage. At least your home will be paid off very, very quick. Because the most important thing in life, I'm telling you, in life, is to have a home. Most of the people, they have problem in their life when they have no home. Okay, some people, when they begin work like 20 years or 25 years, they begin and they buy a home. After 20 years, 30 years, sometimes less or more, depending on the person, they own their home. If you own your home, at least you have a home. You are not paying any more like mortgage. You see, in everywhere where you go, you find a problem of housing. Okay, because some people, you find a lot of people, they have a lot of money in their jobs, and they spend it all. They don't pay very quick their homes. They don't save. They just spend it, and this is a very big problem. So it depends, top series, what you are doing in life, or what is your goal. You can, for example, you can. It means you are making just your account bigger and bigger and bigger. This is a good thing also. Or you can think about long investment. You can have, for example, another account, and you buy companies that you think they are good and they can stay 10 years, 20 years, or 30 years. and you begin to make your investing account. Because understand that they are different. Trading account is like a business. Investing account, it's a habit. It's for your, in the future, for a time when you get hit with something big. Now, as they say, if you have heard the news, I think now we are at 36 million people without jobs. Do you understand? 36 million without jobs. What does it mean? If you lose your job and you are in an apartment, they kick you out from your apartment, from your mortgage. The car you can't pay, they kick you out from your car and they kick it back. So it means that if you have a saving, like an investment, you have 10,000, 20,000, 50,000, 100,000 in any plan, like in 401k or any other plan or investing account. Because understand that 401k, although it is an investment retirement plan, but you have no freedom. And they take fees. It means all your life they are taking fees from you. So that's why a lot of people, they don't do 401k, although it is a good little bit because they give you little money. But sometimes they give you just little money and they have a lot of fees. Okay? So you should, if you have some money or you can afford to have an investing account, it's better to have an investing account and put your money there. You buy companies, a lot of companies, and each money that you have, you take from trading account, you throw to investing account and you leave it. Because understand that in investing account, you are looking for dividend, you are looking for long-term thing. It's not like trading. But it's good. If your account becomes bigger and bigger, you buy more stocks and it's very good. Advanced trader, yes. We finished with advanced trader because he was bad today. Jocelyn, well, I think you are very entertaining and interesting. Thank you very much. Top series, Karim. Is 50-day high a good trend line to follow? It shows which stocks have been going up in the last few weeks. Hey, top series. I'm telling you something. 52-week high, it means it's the average of 50 days closing, and then you see where you are. But for me, I'm telling you the truth, top series, I have my own strategy. I don't do moving averages. I know, here is the problem. I know when you go online, these analysts, they always talk about, oh, it has gone through the 50 moving 50 days. We have 100, we have 200, we have 300, we have 500. So whenever you put a day or you minus a day, the line will change. Is this what you are looking for to make trading? That's why for me, I have used them when I was beginning to trade. But when I see my strategies, I find them they don't show you anything. If you have 50, put it 100, you will have different thing. Put it 200, you will have a different line. So it means the more you put days or the less you put days, the line change. It means that this is not a real thing you can rely on. So top series, I don't use what you want to use or what you are using, or okay, I am not using that? Because when you see the price, it tells you everything in the chart. So the only thing you need is you need to understand the chart as I do according to my strategies. Okay? You should have a strategy, not to follow a moving average. Moving average doesn't say nothing. Okay? A moving average doesn't show you when there is a downtrend or there is an uptrend or there is a big bull. It doesn't show you nothing. Okay? Because it goes with what is going. So it doesn't explain anything. But for me, if I see the chart, I tell you there is a trend. It means there is a possibility that stocks will continue to go to the trend. When I buy, I make money. This is something real. And I will show you where we buy. I will show you where we sell. All these are techniques and strategies that you can assess, you can see, and you can practice. Okay? So I don't use indicators and moving averages. Never in my life. I stopped using them. The first year I lost money because of them. Moving averages, indicators. They say to you, oh, overbought, oversold, MACD, and other stuff. These are small strategies. It can work in certain conditions in the market, but they don't work everywhere. And it doesn't give you why. Okay? Why I should buy here? For me, if I tell you buy here, I will tell you the reason why I buy here. And I will tell you the probabilities. I will tell you what I expect. I tell you if the trade doesn't work, what should I do? It means it's the whole strategy that you should learn. It's a way of doing business. It's not you put $100,000 because of a line that it is going up or going down. You put this money there and because this line is magic. Because this line, 50-day moving average, if you change it to 100, it will be different. So who tells you to put 50 or 100, 200? Who is this person? Is it the market? The exchange? They ask you put this 50, 100 and you make money? No. So this is what I'm explaining. So top series, I don't believe in moving averages. I don't believe in indicators. I don't believe in volume. So all these three that people use, I don't use. Okay? Jocelyn Cotti said, please continue. Thank you very much, Jocelyn. Ruku said, Karim, is life going to be different after the wave of the virus? How will that change the market? Listen, Ruku, try to understand this. We have 5 weeks or 6 weeks and the stock market is doing good. But we have bad news. America here. Why you are speaking about second wave or third wave? The first wave, it's gone. The market is doing excellent for 5 or 6 weeks. You don't see that? The news that you have seen before about the coronavirus, we have about 1 month of the news. That's it. So I will show you, Roku, in order to understand the market as I see it. Because you are seeing the market because of what you are reading or watching on TV. Those people, they don't show you the whole picture. Okay? So if I ask you, what is the market doing now in this 5 or 6 weeks? What do you think it is doing? The market was excellent. Uber has doubled in a few weeks. Uber, it was 15 or something. It goes to 30 or something. It doubled. And you are telling me about virus and virus. Another thing I'm telling you. What do you think about the news about coronavirus? Is it going good or bad? in America. It is going bad, right? Each day we have new cases. Each day we have deaths. The toll of our deaths and our cases, we are the first in the world. But why our market is doing good? If I ask you why the market is doing good in these 5 or 6 weeks, what is the relation? Because the stock market doesn't care about this coronavirus. People are making money. We in our trade, we are 43% in this 7 or 8 weeks. 47%. No, not 47. 43% on Friday. And you are telling me the second wave, the third wave. Where is this wave in the stock market? So, Roku, focus on what's going on the stock market. See what's going, see the prices, see where the market is going. Do not watch too much TV because they misled you into other things and they show you things that doesn't exist in the market. The market is clean because the market is price. There is no, see, in the stock market, the price is speaking. I will explain this, Roku. Maybe you get an idea of what I am speaking. Okay. So let's make two things. Now here is the media, and here is the stock market. Okay, this is just an example. Now, so if you see, for example, since we are speaking about let's say since we are speaking about coronavirus toll, it means in America here, okay? So let's say we can begin from one case. I think this in the end of January 2020, okay? In the end of January, we have only one case. Now, it's going now. I think now it's 1,250,000. I don't know. I don't see the exact number, but I think it's 1,250,000 or more or less. You can check that, no problem. Now, and then you see, for example, I don't know the deaths right now. Let's say we have 100,000 deaths. Now, okay, there is an uptrend of bad news. Okay, you can see that. Uptrend. Now all these from one case to 1,250,000 cases. So what's this? This is bad news. Okay? This bad news continues until now. But in the stock market, it goes down, but in 6 or 7 weeks, it's going up. Now we are in uptrend and the market is good. The market is good. I'm telling you right now. So where is this good from the bad news? Where is it? Can you explain that? Now, stock market, when we say here good, is just because the price speaks. The price speaks. Okay? And here, the coronavirus news and the media, here we have people speaking. Now, people speaking, they show bad things happening. Yeah, another thing about the media. They say we have 36 million jobless. What does it mean? It means just a few months, 2 months or 3 months, it was only 3 million who have no jobs. Now it is 36 million. Where are we going? It means all these by the media, it is bad news. Now I ask you the question, why the stock market is doing good? Can you tell me the reason? Okay? So from what I explained, okay, can you think about the difference between stock market and between the real world of coronavirus, of unemployment? The government is giving help for everybody. They give money, they help the paycheck, they give you